Hello traders, you are welcome back to the Forex Geek channel. If you have ever missed a big breakout and found yourself chasing price, then this video is for you, okay? In this particular video, we are just going to be diving into one of the most powerful indicators to help you catch breakouts before they happen. And that indicator that I'm referring to is the squeeze index indicator. So stick around because I'm going to show you exactly how this indicator works, how to use it in real trading, and a step-by-step strategy to spot market explosions in advance. So if you are excited for this, hit that like button and subscribe to the channel so that you never miss these game-changing strategies. Now let us get into it. So what exactly is the squeeze index indicator? Simply put, this indicator helps traders to identify low volatility periods where price is coiling up before a major move. So it works by analyzing market momentum and volatility compression, showing us when the market is in a squeeze before a big breakout. Now, the key idea is that markets move in cycles. Remember that price does not move in a straight line, right? Markets actually move in cycles, okay? From low volatility to high volatility and so on, right? Low volatility, which are periods of consolidation, to high volatility, which are trending moves. So sometimes you will notice that price might consolidate for a while, and then there will be a breakout. Market is going to trend. Maybe after trending for a while, and there might be a little, phase of consolidation again, and so on and so forth. All right. So that is what we are referring to when we say that the market moves in cycles. All right. Okay. Now, when price is squeezing, it means that momentum is building up. Okay. And once it releases, we often see a strong trend in one direction. So now that we know what the indicator does, how do we use it to time breakouts? The first is to look for low volatility zones. All right. When the squeeze index is low, it signals that price is winding up. Okay, so you watch out for breakout confirmation, right? At this point, we didn't exactly have a breakout. We didn't exactly have a breakout here, but then towards this zone, you can see we had a breakout, finally had a breakout, and even a retest, and then a continuation in the direction of the breakout. Okay, so in this case, once you notice that the squeeze index is low, just be watching out for the possibility of a breakout. Then when a breakout happens, make sure that you time your entries properly, okay? Mark out your support zones and your resistance zones properly. So the breakout occurred and the retest even occurred as well. You can see the retest here. So now right after the retest, you should be looking for sell opportunities. You can see rejection candle here. Can you see that evening star? You can see that evening star around there. So that's a sign that the sell move is valid, right? So you could have considered entering a sell after you got your confirmations. Your stop loss can be above the breakout point, and your take profit can actually be, around support zones. And just make sure that you have a good risk to reward ratio. In this case, it's about 1:3.18. Okay. Make sure you always get breakout confirmation. It is necessary. The moment the indicator spikes, it suggests that the market is exploding out of the squeeze phase. And you can see that right about the time that this indicator went up, you can see that after a brief consolidation following the breakout, you can see that there was a move towards the retest before a continuation pattern in the direction of the breakout. You can also use additional indicators like moving averages or momentum oscillators, to confirm the direction of the breakout. Okay, so this simple process helps you anticipate high momentum moves before they happen instead of reacting too late. Okay, so basically, if you want to make use of this strategy, after you must have already added the squeeze index indicator to your chart, just identify when the indicator is showing a squeeze phase. When it is showing a squeeze phase, which is a phase of low volatility, right? When the indicator is down, then you look for breakout confirmation as soon as the indicator spikes, just know that it's time to act. All right. Then you can use candlestick patterns or momentum indicators to confirm. You can see that here we had, you can see this bullish candle, this spike, validating the breakout. Then at this point, you can see that we had an evening star validating the continuation after the retest. So you'll notice that when the squeeze index enters this extreme level, then just know that the spike is taking a breather, right? After the spike, this squeeze index spike indicated that there was a breakout. So when it enters this extreme level, just know that the momentum is gonna drop, or the surge following the breakout is getting lower, and then there could be a reversal or a pullback. Okay, and you can see that's exactly what happened here after the surge from this breakout point. After the surge from this consolidation, you can see that the indicator entered this extreme level, and the red mark indicated that a reversal or continuation in the direction of the breakout is coming up, and that's exactly what happened. Okay, so this method actually keeps you one step ahead of the market while minimizing false breakouts. Make sure that you always check out for candlestick patterns confirmations, okay, and chart patterns as well. Whatever pattern that you can find that confirms that breakout, that confirms that continuation pattern, make sure you always get confirmation. It is very necessary, okay? And then you can enter your trade, set a stop loss at an appropriate level. If you are trading breakouts, your stop loss should be above the breakout point, okay? That's for a sell. Then you target, support levels for your take profit. But if it's a bullish breakout, let's look for a good example of that. If it's a bullish breakout, okay, for example, what we had happen around here, you can see we actually had a bullish breakout from here, right? So at this point, you can see that the price went up, even we tested the breakout point. Then you can see that there was continuation after that. The enter a buy, set a stop loss below the breakout points. Take profit can be at resistance zones. Right? Take profit can be at resistance zones. So just ensure that your confirmations are there, okay? So that you do not jump into the trade blindly. Make sure you get your confirmations. So the squeeze index indicator is a game changer for traders who want to catch breakouts early and avoid choppy markets. By understanding when volatility is about to explode, you can time your trades with precision and trade with confidence. If you found this strategy helpful, smash that like button and subscribe for more powerful trading insights. Also, drop a comment below if you've used the squeeze index before, or if you have any questions. I would love to hear from you. See you in the next video. Happy trading.